Florence, October 1346. The two most powerful banks in the world collapsed in a single week. The Bardi, the Peruzzi. Names that had meant wealth for 2 centuries. Gone. 300 million. Florence vanished. Enough gold to buy every building in London 3 times over. 16,000 families were ruined. The richest city in Europe was brought to its knees. Not by plague, not by war. A king in England who looked at his debts and said, "I don't feel like paying." And with those words, medieval finance died. Something new had to be born. Go back 3 centuries. Europe in the year 1100. The continent was poor. Desperately poor. The economy ran on feudalism. Lords owned land. Peasants worked it. Almost no one used money. Coins were scarce. Credit didn't exist. If you wanted something, you traded grain for cloth, chickens for horseshoes. The Catholic Church controlled everything, and the Church had one absolute rule about money. Usury was sin. Lending money for interest was forbidden. Mortal sin, hell-worthy. The Bible was clear. Deuteronomy 23:19. Thou shalt not lend upon usury to thy brother. If you charged interest on a loan, you couldn't take communion, couldn't be buried in sacred ground. Your soul was damned. But here's the problem. The problem that would change everything. Europe needed credit.
I desperately needed it.
Kings needed money to fight wars. Merchants needed money to finance trade voyages. Farmers needed money to buy seeds before harvest. And no one would lend without profit. Why take the risk? The Church said. Don't lend at interest, reality said. We'll die without credit. Someone had to solve this impossible equation. Enter the Lombards. Not a family, not a company. A region, Lombardy, in northern Italy. Milan, Pavia, Cremona. The merchants of Lombardy looked at the Church's usury ban and thought, there has to be a loophole, and they found it. Actually, they invented it. The trick was simple, brilliant, technically legal. Don't call it interest. Call it something else. 1150s. A Lombard merchant in Milan meets with a French nobleman in need of money. I need 100 silver marks for 6 months, the nobleman says. I cannot lend at interest, the merchant replies. That would be sin. Silence. Then, but I can purchase something from you now and sell it back later. Purchase what? A promise? A bill? I'll buy your promise to pay me 110 marks in 6 months. I will pay you 100 marks today. The nobleman blinks. It's just interesting with extra steps. The merchant smiles. Technically, it's a business transaction, not a loan. Entirely different. The Church didn't love this interpretation, but they couldn't quite prove it was usury. The bill of exchange was born, the foundation of all modern finance. By 1200, Lombard merchants had spread across Europe. Every major city had a Lombard banking house. London, Paris, Bruges, Barcelona. The local name for pawn shops became Lombard houses. The street where bankers worked became Lombard Street. The word bank itself came from the Italian banco, the bench where money changers sat. The Italians weren't just avoiding sin, they were inventing banking. 1252. Florence minted the first gold florin, standardized currency, same weight, same purity, accepted everywhere. Before this, every prince minted their own coins, different weights, different values. Trading across borders was chaotic. The florin changed that. One currency for all of Europe. The dollar of the medieval world, who controlled the florins, the Florentine bankers, the Bardi, the Peruzzi, the Accioli. These families built something unprecedented. Branch banking networks. An office in Florence, another in London, another in Paris, another in Bruges. It could move money across Europe without moving gold. It's just letters, instructions. Bills of exchange sent by courier. A merchant in London could borrow from the Bardi's London branch. The Bardi's Florence headquarters would record the debt when the merchant repaid. The books balanced without a single coin crossing the English Channel. Revolutionary. 1290s. The Champagne Fairs. 6 times a year, merchants from across Europe gathered in northeastern France. A massive trading event. Cloth from Flanders, spices from Venice, English wool, German silver. The Lombard bankers set up tables at these fairs, not to trade goods, to trade credit. A merchant from Barcelona could get a loan in January, repay it in May at the next fair. It's all documented, all tracked. The Bardi family alone had 15 offices across Europe by 1,300, 300 employees. Operating capital of 875,000 florins, more money than most kingdoms possessed. The Peruzzi were even bigger, 1 million florins in the capital. They didn't just lend to merchants, they lent to monarchs. 1294. Edward I of England needed money. Wales was rebellious. Scotland was hostile. France threatened war. An English official approached the Bardi banking house in London. King requires £30,000. Immediately, the Bardi agent calculated. That was 150,000 florins, an enormous sum. The collateral. Future wool exports. England produces the finest wool in Europe. We'll give you exclusive rights to purchase it. Interest rate? The king prefers to call it a processing fee. 20% annually? Bardi agreed. Then Peruzzi agreed. Then other Italian banks agreed. English wool flowed to Italian banks. Italian credit flowed to English kings. For 40 years the system worked. Loans made, loans repaid. Profits accumulated. Then came Edward III. 1327. Edward III became King of England at age 14. Ambitious, brilliant, aggressive, he looked at France and saw opportunity. The French throne succession was unclear. Edward had a claim through his mother. 1337. The 100 Years' War began. War is expensive, unimaginably expensive. Armies need food, weapons, armor, horses, ships, castles, siege equipment. Edward III turned to the Italians. The Bardi, the Peruzzi, I need 600,000 florins. For the French campaign, the Bardi hesitated. That was more than 2/3 of their entire capital. Your Majesty, that's substantial. I'm conquering France. The spoils will be enormous. You'll be repaid tenfold. The promise of future wealth. The same trap the Genoese would fall into 2 centuries later. The Bardi lent 400,000 florins. The Peruzzi lent 600,000 florins. Combined, over 1 million florins. More money than had ever been lent to a single borrower in human history. 1340. Edward III won major victories. Sly's Crazy was still 6 years away, but Edward was winning. But winning didn't mean paying. The war costs kept mounting. Edward kept borrowing. 1341. Another 200,000 florins. 1342. Another 150,000 florins. The Italian bank's total exposure to England, 1.5 million florins. Their combined capital, 1.9 million florins. They'd lent nearly 80% of everything they owned to one king. Fighting one war. The Bardi partners met in their palazzo in Florence. 1345. We must demand payment. Edward owes us 900,000 florins directly. With interest, over 1.2 million. If we demand payment, he might refuse. He can't refuse. We funded his war. He owes us. Kings don't owe. Kings grant favors. There's a difference. The letter was sent to London, polite but firm. Your Majesty, the House of Bardi respectfully requests payment of outstanding loans. Edward III's response arrived 6 weeks later. The war continues. The payment will come when France is conquered. Patience is advised. Translation, I'm not paying. What are you going to do about it? The Bardi couldn't seize a king's assets, couldn't sue an English court, couldn't send soldiers to collect, could only wait and hope. 1346. The waiting ended.
Edward
III issued a decree. All debts to foreign creditors were suspended indefinitely. The kingdom's needs came first. The news reached Florence in October. The Bardi were finished. The Peruzzi were finished. Over 1 million florins would never be repaid. The banks had lent everything to Edward, had nothing left for their own depositors. Within a week, both banks closed their doors permanently. The wealthiest families in Florence became the poorest. Banking houses that had lasted 2 centuries vanished in days. Thousands of depositors lost their savings. Merchants couldn't access credit. Trade froze. Florence, the richest city in the world, faced economic catastrophe. the question echoing through every palazzo, every counting house, every market square. If the greatest banks in the world could be destroyed by a single debtor, what did that mean for banking itself? Could the Lombard system survive? Or would finance have to be rebuilt from scratch? The collapse of the Bardi and Peruzzi didn't stay contained in Florence. Economic disasters never do. October 1346. Banking houses across Italy began failing. The Acciaiuoli, the Bonacorsi, smaller families that had partnered with the Bardi and Peruzzi, loaned them capital, shared their risks. When the giants fell, they pulled everyone down with them. Florence descended into chaos. Depositors who had trusted the Bardi found their accounts frozen. Money they'd saved for decades. Wedding dowries, retirement funds, business capital, gone. Riots broke out in the streets. November 1346. Angry crowds surrounded the Bardi Palazzo, threw stones, screamed for justice. The Florentine government sent guards, not to arrest the bankers, but to protect them from lynching. The Bardi family fled Florence, some to Venice, others to small towns in the countryside. Their palazzo was seized, sold to pay creditors. It covered maybe 5% of what they owed. The Peruzzi suffered worse. Their patriarch, Tommaso Peruzzi, was imprisoned for debt. He died in jail in 1347, still owing 600,000 florins he could never repay. Across Europe, the ripple effect spread. Lombard banking houses in London, Paris, and Bruges had extended credit based on the Bardi and Peruzzi's stability. If the Bardi backs this loan, it's safe. Now those guarantees were worthless. Credit markets froze. Merchants who relied on bills of exchange found no one would honor them. Trade slowed to a crawl. The champagne fairs, which had thrived for a century on Italian credit, saw attendance drop by half. Without the Lombard bankers facilitating transactions, the entire system seized up. England itself faced consequences. Edward III had won his battles, but he'd lost access to credit. No Italian bank would touch him. His reputation was poison. 1348. Edward needed money for more campaigns. He turned to English merchants. Force loans at sword point. Lend to your king, or face charges of treason. Not exactly a sustainable financial model. But the real crisis was philosophical, theological. The church saw the banking collapse as divine judgment. See what happens when you profit from usury? Priests thundered from pulpits. God punishes greed. Pope Clement VI issued a papal bull in 1347, condemned excessive money lending, called for stricter enforcement of usury laws. The surviving Italian bankers faced an impossible situation. The church said lending at interest was sin. But without interest, there was no profit. Without profit, there was no banking. Some bankers gave up, turned to simple merchant trading, buying goods in one city, selling them in another. Honest work blessed by the church. Others went underground, continued banking in secret, hiding the interest inside complex transactions. More creative accounting. A few, a very few, decided to think differently. 1348. Cosimo de' Medici was born. Too young to remember the Bardi collapse, but he'd grow up hearing the stories. His family was a minor nobility in Florence. It's comfortable, but not wealthy. His father, Giovanni di Bicci de' Medici, was a small-time banker. Careful, conservative, nothing like the Bardi. Giovanni watched the collapse and learned lessons. Never lend to kings, he told young Cosimo. Kings don't repay, kings take. Then who do we lend to? Everyone else? Merchants, craftsmen, small nobles, people who need us more than we need them. But there's less profit in small loans. There's also less risk. The Bardi gambled everything on one man. We'll spread risk across hundreds. Diversification, portfolio management, concepts that wouldn't have formal names for centuries. But Giovanni understood the principle intuitively. 1397. Giovanni de' Medici opened his own bank in Florence. Starting capital, 10,000 florins, tiny compared to the old giants. But Giovanni had a different model. First, no massive loans to monarchs. Maximum loan to any single borrower, 5% of capital. Second, branch offices. Yes, but each branch would be a separate partnership. If one failed, it wouldn't bring down the others. Third, multiple revenue streams, banking, yes, but also textile trading, wool processing, silk importing. Never depend entirely on credit. Fourth, work with the church, not against it. This was genius. This changed everything. The church still condemned usury, but the church also needed banking services. The Pope collected taxes across Europe. I needed to move money from Germany to Rome, from France to Rome, from Spain to Rome. Someone had to facilitate those transfers. Why not the Medici? 1402, Giovanni de' Medici secured a contract as papal banker. Not a massive contract, just handling tax collections from a few regions. But it was legitimate, blessed by the church. No one could call him a usurer when he was serving the Pope. The income was steady, reliable, low. Profit margins, but near zero risk. Other Italian banking families copied the model. The Strozzi. New names replacing the fallen Bardi and Peruzzi. These new banks were different, smaller, more cautious, diversified. They learned from the catastrophe, built systems designed to survive individual failures. 1420s. Lombard banking was revived. Not as dominant as before, but functional, growing. Florence's economy recovered. The wool trade boomed. Textile manufacturing expanded. The city's wealth returned, though distributed more widely now. The Medici Bank grew steadily. By 1429, the capital had reached 180,000 florins. They had branches in Rome, Venice, Bruges, London, Geneva, but unlike the Bardi, each branch was independently capitalized. The London branch's losses couldn't touch the Rome branch's assets. 1434. Cosimo de' Medici, now 44, took control of the bank. His father had died. The inheritance was substantial, but not overwhelming. Cosimo was smarter than his father. He's more ambitious, more ruthless. He understood something profound. Banking wasn't just about money. Banking was about power. The Bardi had been rich, but they'd been servants, glorified accountants for kings who used them and discarded them. Cosimo would be different. He wouldn't serve power. He would become powerful. 1434. Cosimo seized control of Florence's government, not through war, through influence. The Medici Bank was the largest taxpayer in Florence, largest employer, largest source of credit for the city's merchants and craftsmen. When Cosimo spoke, people listened. Not because he threatened, because they needed him. Rivals tried to exile him. The Albizzi family, traditional rulers of Florence, drove him out in 1433. Cosimo went to Venice, set up operations there, waited. Within a year, Florence's economy suffered. Without Medici credit, businesses struggled. Without Medici tax payments, the city government ran short on funds. 1434. Florence invited Cosimo back, begged him back. He returned in triumph. The Albizzi were exiled. Cosimo became the unofficial ruler of Florence. Never took an official title. I didn't need one. He was richer than the government. More connected, more essential. This was the new model. Not bankers serving kings, bankers becoming kings. 1450s. The Medici Bank was the largest financial institution in Europe. 8 branches, 57,000 florins in annual profit. Over 300,000 florins in total capital. Still smaller than the Bardi had been at their peak, but vastly more stable. Cosimo lent it to the Pope, to the Duke of Milan, to the King of France. But never more than his bank could afford to lose. When borrowers defaulted, the Medici absorbed the loss and moved on. No single loan could break them. The question facing Europe's economy in 1460, has Italian banking truly recovered? Or was this just a temporary reprieve before the next great collapse? And could Cosimo's model of diversified, careful, politically connected banking survive his death? The answer would reshape European finance for the next 2 centuries. Cosimo de' Medici died in 1464. He was 75 years old. He was the richest private citizen in Europe. His funeral in Florence lasted 3 days. Every guild sent representatives. His foreign ambassadors attended. The Pope sent a delegation. They weren't just mourning a banker. They were mourning the man who'd rebuilt Italian finance from ruins. But Cosimo's death raised a question. Could his system survive without him? His son Piero took over the bank. Piero, the Gaudi they called him. sick, weak, not a natural leader. The other Italian banking families sensed opportunity. It's Pazzi, the Strozzi. Time to challenge Medici dominance. 1466. Several major Florentine debtors defaulted on Medici loans. Coordinated, deliberate, an attack disguised as bad luck. Piero faced a crisis: call in all outstanding loans to cover the losses, or absorb the damage and continue. He chose the conservative path. Called in loans. It demanded immediate payment. It worked. The Medici bank survived. But dozens of Florentine businesses failed. Merchants who couldn't pay immediately went bankrupt. The city blamed Piero. Your father would have been more patient, more understanding. Piero died in 1469, just 5 years after inheriting. His son Lorenzo took control. Lorenzo de' Medici. 20 years old, brilliant, charismatic, ruthless. Lorenzo the Magnificent, history would call him. But Lorenzo made a critical mistake. He confused banking with politics. His grandfather Cosimo had kept them separate. Banking was business. Politics was an influence. Never mixed the two directly. Lorenzo mixed them. He used bank funds for political purposes, funded allies, bribed officials. Threw money at diplomatic problems. The Medici bank's profits began declining. 1470s, then the 1480s. Meanwhile, other Italian banks were rising. The Fuggers in Germany, with Italian training, became major players. The Genoese families rebuilt. Venice's bankers expanded. Medici were still rich, still powerful, but no longer dominant. 1494. Lorenzo's son Piero II was driven from Florence. The Medici bank collapsed. Branches closed. Assets seized. The family would return to Florence eventually, produce popes, produce queens of France, but they never rebuilt the bank. The era of Medici financial dominance was over. Yet Lombard banking didn't die with the Medici. It evolved, spread, became the foundation of European finance. By 1500, Italian banking methods had been adopted everywhere. Double-entry bookkeeping, invented by a Franciscan friar named Luca Pacioli in 1494. But based on practices Italian merchants had used for 2 centuries, every transaction is recorded twice. Once as credit, once as a debit. The system is balanced. Errors were immediately visible. This sounds boring, technical, but it was revolutionary. For the first time, businessmen could accurately track profit and loss, could see exactly where money went, could plan based on real data instead of guesswork. Every modern accounting system traces back to Pacioli's work, which traces back to Lombard banking practices. Bills of exchange became standard across Europe. A merchant in Amsterdam could write a bill payable in Venice. No gold needed to move, just paper and trust. This created liquidity. Money could flow to where it was needed. Capital could be deployed efficiently. Branch banking networks. The Medici model of separate partnerships in different cities became standard. The Fugger family in Augsburg built an empire on this model. Peak assets, 2 million florins, more than the Medici ever controlled.
Ow.
Lombard Street in London became the heart of English banking.
Ow.
The tradition continues today. Doom. The Bank of England sits on Threadneedle Street, just off Lombard Street. Marine insurance. Another Italian invention. Venetian merchants insuring ships against loss, spreading risk across multiple investors. By 1600, European finance spoke Italian. The vocabulary, the methods, the institutions. But the deeper legacy was philosophical. The Lombard bankers proved something the medieval world had doubted. The commerce could be sophisticated, complex, intellectually respectable. Before the Lombards, trade was crude. Barter and simple exchange, banking didn't exist as a profession. After the Lombards, finance became a science. Principles, methods, rules. The church eventually adapted. 1515. The Fifth Lateran Council officially permitted certain forms of banking, not usury, but legitimate return on capital invested. Semantic games?
Absolutely.
But important semantic games. Once the church blessed banking, finance became respectable. Bankers could be buried in sacred ground, could take communion, could be Christian and capitalist. This unleashed economic growth across Europe. Credit flowed, businesses expanded, trade networks grew. The Renaissance itself was funded by Lombard banking. The Medici commissioned Michelangelo, Brunelleschi, Donatello. Art required money. Patrons required wealth. Wealth requires banking. No Lombard bankers, no Renaissance. Simple as that. The Spanish and Portuguese explorations, funded by the Italian capital. Columbus's voyage was backed by Genoese merchants. Vasco da Gama's journey had Florentine investors. New World silver flowed back through Italian banking channels. Even when the Genoese lent to Spain, they were using methods invented by the Lombards centuries earlier. The Protestant Reformation. Luther's 95 Theses. Part of his complaint against the Church involved the sale of indulgences. Guess who handled the financial transactions? Fugger bankers using Lombard methods. The economic infrastructure of European expansion was built by Italian bankers in the 13th and 14th centuries. Every stock exchange, every central bank, every international financial institution, they all trace conceptual lineage to a handful of Italian merchants who figured out how to lend money without technically calling it usury. The rise of Lombard banking teaches a lesson about necessity and innovation. The Church said, "You cannot charge interest. Sin is forbidden." Reality said, "Without credit, civilization cannot function." The Lombards found a way, not by defying the Church directly, but by innovating around the restriction. When rules become obstacles, humans innovate, find loopholes, create new categories, redefine terms. The Bill of Exchange wasn't a loan. It was a purchase of a future promise. Different thing entirely. This pattern repeats throughout financial history. Every regulatory restriction creates innovation. Every ban creates a workaround. Modern finance is full of Lombard-style innovations. Derivatives that aren't quite bets. Structured products that aren't quite loans. Special purpose vehicles that aren't quite companies. Same game, different century. But the Lombards also taught a darker lesson about concentration of risk, about lending to power. Bardi and Peruzzi fell because they bet everything on Edward III. All their capital is one borrower. One assumption: kings pay their debts. They learned what every lender learns eventually. Power doesn't honor obligations if it doesn't have to. The Medici survived because they diversified, spread risk, built systems that could lose individual battles and still win the war. That's the real genius of Lombard banking, not the technical innovations, not the clever loopholes. The genius was building institutions that could survive individual failures, that could adapt, that could be learned. The Bardi failed and disappeared. Medici failed and reinvented themselves. That's the difference between a business and a system. Lombard banking was a system, resilient, flexible, anti-fragile. It survived the Black Death, survived wars, survived political upheavals, survived religious opposition, because it wasn't dependent on any one family, one city, one method. It was an idea, and ideas are harder to kill than institutions. Walk through Florence today. Visit the Palazzo Medici. See where Cosimo planned his financial empire. The building stands, beautiful, empty of the power it once held. But open a bank account anywhere in the world. Fill out a balance sheet. Write a check. Use a credit card. You're using systems invented by Lombard bankers 700 years ago. They're not dead. They're just so deeply embedded in modern life we don't see them anymore. The Lombards became invisible, which means they won. Money doesn't just change hands. It changes the world. And the people who figure out how to move it efficiently, they don't just get rich. They rewrite the rules of civilization itself. Subscribe for more deep financial history documentaries. Because understanding money means understanding power. And understanding power means understanding everything else.